What's going on, traders, and welcome to my stream. Today is actually what is it? Monday, Memorial Day, and right now we're doing the weekend recap about all the stocks that were going on last week. Usually I do a recap of what's been going on Monday, Tuesday, Wednesday, Thursday, Friday. As you know, I usually trade between around 7 a.m. till about 11. And then sometimes I come in the aftermarket as well after 3 p.m. And sometimes in the first day of the week, I trade all day because it's so much volatility. And sometimes there's other days which there's nothing. And to tell you the truth, on Thursday and Friday, there was literally nothing in the middle of the day. So with that being said, I just updated my chair. As you can see, I got a nice chair going on here. If you guys can see it, this is actually my Razer chair going on here. So I do recommend you guys get a nice chair. That chair will actually help you out a lot. And I actually got over here, I got a really nice speaker. That's the Razer speaker or something, because I'm a big fan of Razer. So we're gonna get right into it. I do recommend. I also got a footrest over here. You can see so that I have a footrest over here because sometimes I just lean my chair back like this, and I just pretty much hang out most of the day in the middle of the day, and sometimes I watch some podcasts. Sometimes I watch some. Actually, last week I was watching EDC Vegas, which is a concert, and I was watching the bands. So without further ado, we're gonna start out. We're gonna start out like what happened last week. The basic information you want to get from this video is that the majority of the home run trades, like you have stocks going up 200%, stocks going up 100%, stocks going up 200%. These stocks only happen between a set time period of 6:45, sometimes 7. You got to be ready to go by 7 usually, and most of them happen between around 8 and 10, maybe 11. Most of them. Sometimes we have some things at 7 as well. So so the majority, like home run trades, I'm talking stocks that go up 100%, 200%, 300%, 500%. Everything else, like in the morning at like 4 a.m., 5 a.m., and in the afternoon, very rarely you get some of these. So we're gonna start out with how all my week has went. So far, I've been green on three Monday, Tuesday, Wednesday green, and Thursday the S&P 500 plunged 800 points, and the stocks were not breaking pre-market high, and it was pretty shitty. So we're gonna start out with actually Monday. This is so you can see. So I actually have a really nice setup here. So Monday, pretty much simple. I start out the day. That's the May 19th, 25. Started out pretty good. You can see so that this is my first trade of the week. This was CETA. CETA pretty much, as you can see so here, we broke yesterday's high right here of 320, so that's a setup in my playbook, so that's perfectly fine. The setup is called day two continuation. Day two continuation. So if you see me in the chat room putting in day two continuation, you can see that why does this matter? Is stock continuing and breaking yesterday's high? So the strategy here is buying it as this stock breaks yesterday's high. And in this situation, it was 320. It was right here. You can see so on the daily, the left is on the daily, the right is the intraday on the 5 minute. So we broke 320 and I buy it at 320. That's fine. We come back, I take a small loss and I let it go. I give myself two chances. I give each stock two chances to prove itself that it's worth it, and pretty much I pretty much leave it alone. As you can see, so in this situation, CETA went all the way up to $6, and actually, this is important to not short date, to not be stubborn on your shorts. Sometimes day twos are the best setups. Sometimes day three, day four, but sometimes you have a stock going up 4 or 5 days in a row. In this case, CETA was five times in a row for Green Day, which is very rare. for the small cap market. So CETA, I buy it, I let it go, and then in the middle of the day we hold VWAP. You know, we consolidate, we hold VWAP, and VWAP also coincided with yesterday's high of 320, and we run up. I didn't really trade this one. I was actually focusing on other things. I don't have time to sit midday and watch through this grind. Sometimes I do, and in this situation, I should have bought it 360, 380. Like I say, you know, watching stocks midday, you could potentially buy it at 380 and sell it as it goes into after hours. But you can see the majority of the chop that happened here was pretty much midday. Midday was a chop. There's not much range here, and then we consolidate and go up. So we're going to move on to the next ticker that I actually did trade, NWTN. This was also a day two continuation. It broke 220. You can see, so this is another setup. So like I say, day two continuation. Actually, this is not day two. This is more like 1, 2, 3. This is day three continuation. So we broke 224. I'm kind of skeptical because we're like, hey, this is day four. How much higher can this really go? I ended up buying it at 270, and then I sold it, and then I actually bought it a couple times. And as we made a new high, you can see, you know, you can buy it as it breaks new high. 270, we went to a high of 290. You can buy it again at $3, went to 380. So in this situation, you know, taking profits along the way, 10%, 10%, maybe 15%, and then, you know, letting it go. That's what we're doing here. Sometimes in this situation, if you hold longer, you can make the full bank of the full chunk, maybe make $1. But your goal is to trade the right ticker at the right price with the right stop loss, and then, you know, let the profits roll in. That's really your plan here. So this is more like day two. So NWTN was a huge gain for me. You can see so on the top right. I think I made like 520 just buying it up. The next ticker comes up to FAAS. Let's see, where did I trade that one? That was 59 to 55. Okay, so this is a very simple ticker. This is called you know, gap and go setup. So first we had number one, it was day two continuation, or day three. It was a day continuation, and this is more of a gap and go setup. That means the stock gaps up and then breaks pre-market highs. Like right now, so every day I look at the S&P 500. Is the S&P 500 up on the day, or is the S&P 500 down on the day? Because when the S&P 500 is down on the day, like it was on Thursday, you're going to see a different market. The stocks will not break pre-market highs, and you don't want to buy it because that's going to be where the short sellers are at. So you have a intraday breakout here of 45. I actually bought this intraday breakout and I sold at 55. And then I bought it again as we had this downtrend over here at 60. And then I pretty much sold it at 55. But I bought it. So the first time I got stopped out. I bought it a second time as we broke 45, sold it at 55. That's the majority of my chunk. And then I bought it again with small size as we break this downtrend, and I got stopped out. So, you know, first flat, second was a profit, third is a loss, small loss, and then I managed my position correctly. So overall I made, I don't know, like 1,300 on it, which was pretty good. Moving on to another trade. This is PTIX. So a lot of traders are confused, you know, first day of the week, second day of the week, you know, me being here for so long and looking at these small caps. Actually, you know, you can see like how big my setups is. This is a 42-inch, I don't know, 4K monitor. This is a 32. This is a 27. And that's, so I actually have around 3 screens that I'm looking at, you know, 7 charts with a 4090 Alienware laptop. So in this situation, you can see that this is, you know, you can see, so by looking at the daily, you can see there is this volume bar on April. If you look over here, see, we can get it over here. You can see there is the volume bar is very small, that the stock pretty much hit pretty much at 867. So you can see so that on the daily, 867 is a major area of resistance. So when I saw this setup, you can see so that right here is where I saw it rejected hardcore at 867. You can see this is a very big move for this stock. Went from $3 to $9. So to me, a stock that goes up so quickly and right into resistance, 9 out of 10 times is going to reject. 9 out of 10 times. So as you can see, so here that and then we pretty much broke 950, and then we came back slam. So actually, initially I was red in this trade, but I added into my short, and then I covered at lows here. So what happens is you got a stock, flying up to a very strong daily resistance of 870, and it squeezes the shorts out by a little bit. Actually, from 870, it went to like 950. It squeezes the short out by with $1. And what happens on the first day of the week? What happens on the first? Oh, sorry, I don't want it to be too loud. What happens on the first day of the week? The stock surges on Monday and then gets sold off midday. Like the first day of the week, the stocks really fade from like I don't know, it's 8:30 to like 10. Like a stock that goes up, from 3 to 9, usually fades midday and consolidates a little bit before going back up. You gotta understand, like 3 to 9 is a big deal. It's like 300%. When you see something outrageous like that, the stock will need to consolidate. Stocks do not go straight up. I mean, it's very hard for a stock to go up, 300%. And in this situation, we had, a textbook daily resistance of 870, so from 3 to 9, and we broke that. We squeezed the shorts over here. I added an average. I think my average of PTIX was around, let's see, around 850 something. So and then I pretty much just covered right at the lows. You can see so that my covers were around 635. I covered at, the low was 634. So this is a setup that I really like. You have a stock, you have the main leader of the day, which is PTIX. We broke the daily resistance, we squeezed the shorts by $1, and then we fade as we come back down, for the next 2 hours from 8 o'clock to 10. And soon enough, the stock pretty much went right where I thought at 10. And then we pretty much VWAP squeezed all the way to 14. The news on this ticker receives 3.5. I don't remember, but the stock did have news. It's PTIX. So this is a setup that I really do like. How did I? It's called short the daily resistance. That's what it's called. It's called. You have a stock going up on Monday, first day of the week. Everybody's watching it, and it goes straight into resistance. It squeezes the shorts by a little bit, but because the stock, it squeezes the shorts out around 8:30 to 9, and because the stock is so heavy, you got to understand, like when the market opens, these tickers will have market orders from all the people still stuck on a ticker. You're gonna have profit takers. You're gonna have warrants. You're gonna have I don't know what it is. You're gonna have warrants. You're gonna have people that sell shares. You're gonna have retail traders. I don't know. You're gonna have a lot of people are in with shares. When you have a 300% gapper on the first day of Monday, and it's kind of just hitting that resistance, that's what got me to see around 9 o'clock or 8 o'clock, 8:30, 8:30 to 9:15. That got me to believe to short, and soon enough, that's what happened. We came below VWAP and we pretty much held, and then we went to 14. Thank God I pretty much covered. That was the best. That was a good day. So you can see so far we have a big mover FAS. We have PTIX on Monday. We have NWTN, and we have CETA. So in this situation we had four movers. They made a lot of money the first day of the week. So you got to understand, like stocks, the reason why stocks do well on the first day of the week is that that's where most of the liquidity comes from. You know, to move stocks, you need to in order to move stocks, you need volume. Volume makes stocks move. And because the float of these stocks is little, say 2 million, 3 million, maybe half a million, like a micro float, because the float is so small, these stocks get heavily rotated, and soon enough we have a parabolic move. Like in this situation, we had right here. This is a parabolic move of CETA. I mean, I don't. I mean, all of these floats are underneath 2 million. NWTM, all of these floats are low floats. So you can see, like, we had 4 movers today that gave they gave a lot of activity, and these mover happened. This is a gap and go. This is another gap and go, and this is pretty much a consolidation and then a midday breakout. But you can see so that we had 2 movers and a short, 2 movers and a short. That's what we had. And soon enough, this thing went straight up. So now we're moving on to Tuesday. Tuesday, let's see. So you can see Tuesday. So I was going through some emails, and in my email, I think an individual was very happy about the first Green Day bounce working. So right here, I was a little bit confident because Monday I was confident. Monday I had a great winning day, so I was like, yo, this guy is, I was going through some emails and I said, hey, this individual is making a lot of money. I'm a very interesting trader. I look at what everybody is saying and I look at what works for everybody. And, for some reason, I was reading an email of how this individual's favorite pattern was first Green Day bounce. But that's kind of like my first ideal pattern as well. We had a day 2 continuation, short the daily resistance, and you have the first Green Day bounce. These are setups for my playbook. So this situation, I was like, yo, since people are making money and first Green Day bounce is the thing, I decided to size up on the first Green Day bounce. Like you can see, so this is MLGO. You can see, so MLGO here, we're kind of just selling off over here. We had a bounce, and I thought today in this situation we're gonna break that 164, and we're gonna go to $2 or something. So in this situation, the stock did have news. You can see it was on the 16th. So the stock did have news. We pop up to 164, and then I don't take my loss. I In this situation, I was oversized. I was oversized, and I was overconfident, oversized and overconfident. And these are strategies for disaster. You need to understand. Don't be oversized and don't be stubborn. Because you will have one big loss. In this situation, was oversized, and it was my favorite pattern. And sometimes these patterns don't work out. As you can see in this situation, we were hitting that 164, which was yesterday's resistance, and then we pretty much got slammed. And you might wonder, like, what exactly am I supposed to do? For me, it was a pretty big loss. You can see on my top left over here that it was, a big loss. I was buying it 164, 164. And soon enough, instead of stopping out at 160, I gave it more room than I should have. Eventually, I cut it off at like 150 because that was breaking down on the wedge. And soon enough, that was the right thing to do because it went down. MLGO eventually went back to 250. I don't know what the price is, but I was a little bit upset here because it didn't work. It didn't work. My favorite setup didn't work, and I wanted to size in as much as I could. I wanted to make as most amount of money as I can. So I was overconfident and I was oversized, and I ate it. So right now my day is not starting too good. Moving to the next ticker. The next ticker is actually CETA. CETA. So as I talk to many of my videos, a day, there's an 80% chance you can win shorting day 2. But there's some parabolic movers that go up 3-4 days in a row. So when you have that, you need to recognize that, hey, this stock will not break down. And in this situation, CETA was it. As you can see, so here we are on. You can see so here that CETA. I mean, I don't know how many days is this. 2, 3. This is day 3. So let me remember. Let me review that for you. So day 2 is the best time to short. But that doesn't mean it cannot go day 3 and day 4 and squeeze you out. I don't think I have seen day 5. So, what you want to do in this situation is recognize that the stock is not breaking down. You cannot be stubborn and be like, hey, I got an 80% win rate to short day 2. And you'll see that some other tickers, day 2 works like 90% of the time. But there's some tickers, like the main movers, in this situation, the stock was not breaking down. And my short was right here. As you can see, my CETA short was right here. I actually lost initially about $1,000. My initial short was here. We dumped, we come up, and then we came back up, and we were building this freaking downtrend right here. Like 9 out of 10 times, you have a high, a high, a lower high, and then sure enough, this should have been resistance, and we should have just went straight back down here. But we broke through this downtrend here while I was short, and then I had to cover. I actually said I need to cover this position because I'm short at 630, covered at, I think my cover was at 7. It was I don't know, it wasn't that great of a no, actually that's right. I covered for, I think was it 7? I don't remember if it was 7, but I covered. I covered because of this pop, and I actually went long. And you might wonder, should I really go long day 3? In this situation, it was the right thing to do. You can look at my profit from CETA here on the top right. That as I went long, I actually went long at 7 because I was like, forget this, it's not breaking down. I actually took a nap while I held this position with a hard stop. That I actually sold it as we grinded all the way to 760. So I made back 10% going long, and then I actually bought it again as we broke 8 over here, and I sold 830. I mean, just because it's day 2 does not mean short it. These things can go up day 4, day 3, and day 4. So you need to recognize through the price action whether the stock is I eventually made my money back because I came in, after I took a nap because I had CETA long, and I made my money back going long. I was very happy about that. But initially, I was red. The next ticker is EDBL. Let's see. So EDBL, you can see so that I have a loss there. You can see so this is buying. You have a stock. So I initially bought it over here, $3, and I got slammed on. $3, and I got slammed on. And then the stock eventually broke the pre-market highs over here. We held the pre-market highs. We made a higher high, and then we got slammed again. That was more of a flat trade because you can see in this candle over here, like when stocks make new highs, like in this 1 minute candles, we break in a 1 minute candle. Actually, this is a 2 minute candle. So we break in the 2 minute candle. We had a 360 breakout, and that, we break resistance, we hold resistance, and then we go higher. So I was like, I'm buying as it breaks resistance at 360, at 365. It needs to hold 360, and it did not. And I got stopped out for flat, and I called it a day. That's really all you can do because I missed the pre-market breakout of 330. So it went for 330, 390, and they got slammed back down. So the next ticker is BLMZ. You can see that I do have a loss there. I was buying it as it made a new high here at 28. And then because I chased it. Like you have a downtrend here at 7 a.m. And then I was buying here as it broke 28, and it wasn't the case. This stock was extremely choppy. I did not make money on BLMZ at all. I I should have bought it at 7 because you can see this downtrend. So the higher you get to like 8 o'clock, this was a downtrend break right here. I should have bought it over here at 19, 20. I eventually chased it at BLMZ at 28. Then I got dumped on. I didn't get dumped on. I just recognized it wasn't breaking out. Because usually, if the stock is strong, you're not gonna have like, you're just gonna have multiple 1 minute candles just keep going up, and then retesting, support the resistance we just broke, and then continue on north. So this was a flat trade. Like you have to understand, like I have a lot of pattern recognition on the 1 minute chart. So in my mind, if the stock breaks a resistance point, needs to hold the resistance point and then shoot higher. And if the stock breaks the resistance point and does not hold the support area, which was before resistance, I get out. It's really that simple. I don't hang around because this is a chop piece. So that's basically doing business. I ended up making some money on NRXS. You can see so here that we have a pre-market breakout right here of 475, and the stock, I think it had news. You can see so that the news was FDA clearance. And I'm actually it also had earnings, FDA clearance. So you got really good news on it. So I initially did buy. Initially, I like to buy. I like to buy pre-market breakouts like this, like 475, and I was like, okay, I'm gonna chase it at 5. I actually chased it at 505, and the stock went to $7. So sometimes I sell too soon. Like we all have that problem. We're selling too soon our winners, and we're holding our losers too long. But in this situation, since I bought it at 5 and sold it at, what did I sell it at? 590, I technically made 18%. So even though the stock went higher to 7, there's a lot, there was a total profit to be made if I was perfect from 475 to 7. There's a total profit of $2.50. I could have made a total of 50% profit. I only took, 20% or 18%, and that's enough. That's a really good trade. And I was, if you put 2,000 bucks, 3,000, 5,000 bucks, you make a 20, 30% trade. That's an amazing trade. So we're moving on to, so you have to understand, like in the morning on Tuesday, I started the day off red. And what I want you to understand, like, you can come, and my goal was to, show up after the day has ended and finish the day green. And that's exactly what I did. Let's see. So we had a bunch of movers over here. We had EDBL, EDBL. So in the morning I traded it and I lost. And then EDBL consolidated. Actually, this stock, John pretty much bought it at $3 and he sold it at $6 the next day. I don't know how he does it. He looked at EDBL and he was like, yo, this stock entered into agreement with an existing. I don't know like which tickers were gonna gap up overnight. But sometimes these tickers, as they reclaim VWAP and they hold VWAP, they gap up the next day. So in this situation, see, I lost in the beginning, and I was trying to go short, trying to go long on this range here, but I eventually, figured out that this stock was making a higher high, and then I traded some over here, 340 to 4. So eventually, I did manage to make an $1,800 profit, trading it for 20, 30 cents each time, and I bought 340, sold 380, bought it again at 380, sold for 405. And this is, just basically looking at the next resistance point on the daily and figuring out where I want to sell it. Stock eventually hit $6 to my amazement, and John was selling it for 100% win. And I'm just making 1,800 trying to make my stupid morning loss, which was MLGO oversized and overconfident. That's just the way it is. You're just gonna have to swallow your pride and grind out profits. In this situation, we had so CETA was on the 20th. So CETA, I ended up making some money back over here. You can see, so I ended up buying it. After the market, after I made like 10% over here back, going long on the third green day, I ended up rebuying it as well as at 8. And soon enough, stock went to 970. I actually sold most because I lost patience at around 850, 830. So I ended up making back all my loss from CETA, which was down 1,000, up 3,000. So this was a great freaking trade. And soon enough, and then I left. Soon enough, like after I saw this, I was like, holy shit, the stock it really squeezed short all the way to $10. Actually, I should have shorted some at around $10 because $10 is a round number. So if I shorted at $10, say $9 over here, I could have made a lot of money because it's a big move. You can see the stock is up from $1 or $1.50 to $10 in 4 days. So soon enough, the stock will tell you that eventually how overextended this is and how squeezed the shorts out. So you have to understand, like, this stock squeezed a tremendous amount of shorts because usually they don't pass 2 to 3 days, and soon enough, I mean, you have a stock up from 120, up to 450, and you think it's the end, and if you even short it at 7, and it goes to 10, and then it tanks. So this stock really took its time to pretty much squeeze the shorts out and just dump on you. And you have to understand, after you squeeze the shorts, there's going to be a big pocket of air in which basically the stock is free falling. There's the pocket of air, back to 6. So I pretty much finished that day pretty much flat. Moving on to Wednesday, I think we're moving on to Wednesday. There we go. Wednesday, I actually did pretty good on Wednesday. You can see so that you have TPET. This is also day 2 continuation. You can see so here sometimes day 2 continuation do not work, and in this situation you can see that the volume here was very light. Like you can see so that you'll have 120,000 on the 1 minute, so that's a very low volume to buy. So I was buying it at like 157, took my stop out at like 145, and I think I was oversized on a very liquid ticker. That had news. You can see so that the stock did have news. And the news was fluffy. Completes purchase of remaining Novacor oil. The news was fluffy. So I ended up taking a loss. Moving on to the next trade. Next trade is ASST. This is also ASST. You can see so here. This is also day 2 continuation. So I actually bought it as we broke. I bought a pretty textbook on this one. Let's see. So you can see this is a 52-week breakout. So this is so far we have had many setups. Day 2 continuation, first green day bounce. Short the daily resistance, and in this situation was buying the 52-week breakout. So in this situation, you can see the 52-week breakout is depicted by this line of $9. So I was like, yo, if it breaks $9, I'm gonna go long because it's a 52-week breakout. So that means all these shorts here will need to cover, and that was the right decision. I eventually did buy it at, I don't know, I think it was 9.20, and I sold it at like 10, and then I bought it again at 10.20, and I sold it at 11, and that was it. That's really all I did. I didn't think about shorting it. I didn't think about nothing. I just bought it 2 times, made 20% 2 times, and I left it alone. That's really what I did. I just left it alone, made those 2 trades, and I was like, I'm golden, I'm green. Moving on to the next ticker. This ticker was actually pretty good. GPOS happened, I think. GPOS happened on Wednesday. Wednesday there wasn't that many stocks moving, and then GPOS at around 9:40 we break the pre-market high of 620. I'm like, yo, I'm gonna buy GPOS at 620, and that's exactly what I did. I bought GPOS at 620 over here, and then I sold it at 7. So I was like, awesome, 10% win. But sadly, I didn't really think about that it's gonna go from a 5 to 7. I thought this was like a bounce short. That's what I thought it's gonna go up a little and then sell off. That's what I thought it's gonna do. But the momentum was just outrageous. Maybe next time when it halts like this, I should hold it just a little bit longer. The stock went straight up and it went to the 52-week resistance. So you have to understand, this is not really buying the breakout. This is more like shorting the resistance. because it traveled a long way to get there. The more it travels, it becomes resistance. The less it travels, it becomes a breakout. So there's a big difference between GPOS and ASST. ASST has traveled from $8, broke $9, so it only traveled $1. So that makes it a breakout. GPOS traveled from $6 to $10, so it traveled $4. So $10 becomes resistance. So that's really how you have to understand. Like if it traveled a long way, becomes resistance. If it traveled a short way, it becomes a buy area. So that's really a very good, very good indication. So I was buying it at 620. Then I started short, to tell you the truth, because I recognized this is a short. Because there's you have a stock going from 5 to 10. That's a big move. Soon enough, 10 became the top. I actually ended up shorting it at around 950 or $9, and then it pretty much tanked afterwards. Pretty much, I didn't really hold it as much as I thought. I actually just got chopped out around 8 because I wasn't really patient with it. So I pretty much just shorted at like 920, 950, and I covered into the 8. So I made $1 on the short. I did not make nearly enough on the long and nearly enough on the short. But soon enough, it was a great trade. Moving on to the next trade is EDBL. EDBL was a short. You can see so that, yesterday we had a ticker that went 3 days in a row. So right now, 3 days in a row or 4 days in a row, stocks going up. It's really like a big deal. So, because normally, you have a stock failing on day two. And that's a prime example of EDBL. Yesterday we had a ticker going up 3 days in a row and topped out. Today we have a stock that goes up 2 days in a row and topped out. And maybe the next day we're going to have a stock that goes up 1 day in a row and just tops out. That's the majority of them. Majority of them top out after the first day. So EDBL, I ended up shorting over here. Actually, this midday pop over here got me a little bit scared, but I actually held it. I actually went from for an afternoon walk, and I was short, and then I covered in the aftermarket. EDBL was a huge win for me. I shorted around six. Says right here 570, 580, and then I covered most into the aftermarket. That's really the way I do day shorts and ended up going to $4. The way I do day two shorts, I usually cover at the end of the day. So this was day two short. Very simple. NVTS. NVTS was in the aftermarket. I actually just showed up in the aftermarket because I was watching a video trading and doing some other thing. And I ended up seeing this pattern. I was like, yo, this stock is having a lot of volume. It was having around 950 on the 1 minute, 950,000. So that's a big deal for a small cap stock. Stock that's pulling a million shares on the 1 minute candle. Remember, the other tickers were pulling 150,000 and they were like fake out. The ticker was pulling a million shares on the 1 minute. So that means $4 million every minute is going into this stock. So that's a lot of liquidity. So I took advantage of the liquidity. I didn't really buy, I didn't even see it. But soon enough, I saw it here and I was like, yo, this stock, like, as I teach in my nine and a half hour course or 6.5 hour course, I have flashcards for all the most important thing. When a stock makes a major deal with Apple, Google, Tesla, every time you link a small cap company to a big name like Tesla, Nvidia, Apple, Google, Microsoft, in this situation, this ticker over here, they were linking this NVTS to Nvidia. And Nvidia is, one of the top performance of the year. So soon enough, I got in at 5 with huge size. Then I sold it at 6. I made a huge amount of money, around 13K. So and then I shorted it. I was like, this is outrageous. I started short around 6. I covered into the wash, and then I left it. I left it at that. That was Wednesday. So this is where. So now you have to understand, like, for me, everything, everything up to this point, everything was awesome. but on Thursday, there's something the market did that pretty much affected small cap momentum. And what happened is it's very simple. I'm gonna give you a look at the SPY here, and I'm gonna show you that what the SPY does to small cap stocks. So you can see, so on Thursday, this is the S&P 500. So on Thursday over here, I think it was Thursday, you had, right here on Wednesday, the stock tanked. You can see so here about 800 points right here. And when a stock tanks that amount of, that's a really big tank. It tanked from, I don't know, 592 to 582. So we tanked around 10 points. 10 points. That's a lot of points. So, there's also there's this thing called delayed momentum. When the stock is up, 200-300 points, or when a stock, when the S&P 500 drops 800 points, that's like 3%. That's a big deal. And what it does to small cap stocks, what it does, it just sucks up liquidity. Small cap stocks are based on retail traders like me and you. When you go click, let's buy it. All the Fidelity, E-Trade, Schwab accounts. So soon enough, we got right here. So soon enough, I'm going to show you my P&L on Thursday. As you can see, red. And this is where the rules come in, right? I always, you might want to know, like, should I buy? Should I trade a lot? Should I trade little? What am I supposed to do when the SPY is red? You trade very little. You trade very scared, because yesterday the S&P dropped. There's even though the SPY the day before was red, which was only like 100 to 200 points. On Wednesday the stock dumped 800 points. So that's a big deal. So I'm going to show you how the tickers performed on Thursday, and you can see that I have a red day. You can see I actually right here. You can see Sage. You see we gap up on Sage from $3 to 540, and because the S&P 500 was pretty much dumped the day before 800 900 points, the 7 a.m. push has failed. This is the 7 a.m. push of the micro float of the day, of the lowest float of the day. The 7 a.m. push failed. I mean, we broke the 7 a.m. push, which on Wednesday it worked. So the 7 a.m. push on Wednesday worked, but the 7 a.m. push on Thursday did not work because the S&P 500 dumped 800 points the day before. And then, I actually bought it at 590, and then, I added into the base of 460. I didn't think it's gonna fail, and then I pretty much just sold it at 510. I did, there was a trader that also bought 580, and he kind of got stuck. And I was like, yo, you got to sell it. And I even said into the chat room that I sold it at 510. And I also told him that I averaged down by buying the 450 base, and then I pretty much just called it a loss. That's really the best thing you can do. You can't just wing it. You can't just, wing it. It's just going to be a big loss. The trader got really pissed on this trade because his software was not working. So that's a loss. So now you have to understand, like, in the morning, what else do we have here? We have pops and drops. You have stocks that are not holding VWAP, stocks that are on the backside of the move. You can see BDRX actually went long BDRX at $2 when it made a new high, and then I dumped it at like 187. I took my loss and I moved on. This is a stock that had news. It was a low price stock, but the momentum, we had these algo spikes, and you can see that we broke 210. We hit 240. We didn't really make that big of a move. That's nothing. 10%, 15%. That's really what I recommend. When we're in a shit market, I recommend taking 10% trades. But when we're in a abundant market, like you've seen, like on Monday, Tuesday, there's stock that you really keep running. Like you can make like 50% profit on one trade. But right now, because the S&P tanked, base hit 10%. That's it. So I was trying to buy BDRX and it failed. And then I actually and that was a loss. You can see 3 tickers I have red. The only ticker I actually made money, so you can see so here that I have a note here that right here. So this is what happens. Stocks do not break pre-market highs when the market is red. Liquidation on all small cap stocks, sell off Sage, BDRX, KITS. So you had 5 tickers, that didn't break pre-market highs. Didn't break pre-market highs. Didn't actually, I don't know where the other ones uh where didn't break pre-market highs. You have a lot of tickers that did not break pre-market highs. So my best trades that day was ASST. You can see that ASST in this scenario here was a day, I don't know, 1, 2, 3. It was a day 4 continuation right here. But 11 to 13. I mean, is it really worth it? Making maybe 10%. That's really how it did. You can see so here, day 4 continuation, buying it at 11, hit 1250. That is 10%. That is nothing. So you have to understand, we're in a shitty market, cold market. Take 10% because in this situation, if you bought it at 11, say this is a day 4 continuation, and you buy it as it breaks 11, this ticker, made from 11 to 1250, it didn't make more than 10%. So it's either 10% or nothing. You can see so BLMZ. Actually, I traded the stock. Actually, I traded the stock over here. Um, Over here, I traded it. I traded, and I also traded over here. I mentioned that what is this? This is an uptrending wedge pattern. You see, this is the breakout point of 13, and this is the wedge pattern. So this is the setup that I traded. I actually bought it at 1250 and sold 1350. So I did make $1 off it. So that was my green trade. So I actually had a bunch of red trades. You can see so on my top, I had BLMZ. I was trying to I was trying to trade in the aftermarket. I traded it poorly. I bought it as it broke 18, got stopped out. Bought it again as it broke 20, got stopped out. Actually, I didn't take profits here. To tell you the truth, I bought it at 20, and it hit 20 out 21.7, and I didn't take the profit. So it was my fault for not taking profits. You can see I have problems just like you. BLMZ, and then we had Bond here. Bond. So if you look at Bond here, this Bond trapped me. You can see that I buy it as it makes a new high on the what is it called? It makes a new high based on this high, 225, and I think this is going to go to $3. Why exactly am I buying Bond as it broke 230 here? Because if you remember a stock in the past, let me see if I show you. I like midday consolidation. So when I have a midday consolidation, like you can see, I thought that bond is going to turn into an EDBL. So when I saw that it's breaking the intraday highs over here, and it making a higher high, I was thinking that bond is going to break the 340 and run to 460. But that was not the case. That was just part of doing business. You can see where is bond. There you go. It makes a higher high and it fails. So I had really good reason to believe bond is gonna go, and then I got stopped out, and that's the way it is. It's just part of doing business. They crushed me in a 1 minute candle. That was very shitty. And you can see NVTS. NVTS, I think on Thursday was the only ticker running. And in this situation, we reclaimed VWAP and we held VWAP. Remember, this is the NVIDIA stock from Wednesday. So I bought it at like 470, and then the stock pretty much hit 520, and I didn't take any of them out. I was like, yo, this stock can do more. And then I had this dump here in the aftermarket, and then it came back. I was like, forget it. I'm just going to take it. I sold it over here somewhere. It just NVTS is a very thick stock, so you have to understand, like, you know, um, in the aftermarket, the news was fresh, the volume was there, the stock went up, NVTS went up from, I don't know, 4 to like 7. But during the day, that's when all the algos are there, and the thicker the stock, the less it's going to move. And NVTS had, I don't know, 120 million float. So during the day, it just doesn't have range because, I mean, it has range, but it doesn't have that much range. And the stock has fresh news, it has huge range. When the stock, the news was, not from the yesterday's aftermarket, is during the day, you have a lot more individuals, moving the stock. So in this situation, the only amount of range we got here is from 470 to 520. The next ticker, I don't know, what was it? Now we're moving on to Friday. Oh, moving on to Friday. There we go. For Friday was pretty interesting. Friday was actually this is I have a small account which I'm just playing around with you can see so here. So I have a small account trading challenge over here that I'm just trading with. You can see that Friday we had BLMZ. BLMZ was running on Wednesday, so on Thursday. So on Friday we woke up actually and we had a breakout. This is the breakout that happened around 8. I totally missed this breakout because I was honestly getting some tea. You can see that I drink tea, and I was really in the other room trying to get some more tea. And this breakout happened in about 2 minutes, and I missed it. And then we had some traders in the chat room buying it at 24.5, and they flipped it at 28, and they made 15%. I did not want to chase at 24. I felt that it was a little bit overextended. I actually wanted to buy the 22 because I was watching BLMZ all day, and I missed it by 2 minutes, in which I was going to get some freaking tea. That's just the way it is. And this is the reason why I'm actually flat on that day. You can see another ticker here, IMNN. IMNN, I didn't really trade this correctly. I pretty much posted IMMN in the chat room. I actually posted IMMN in the chat room that this ticker is moving up. You have to understand, like the majority of the big runners, you can see there was not a lot of big runners on Thursday. Reason there were not a lot of big runners on Thursday is because Wednesday the SPY tanked 1,000 points. And then I was like, where the hell are the freaking runners? And soon enough, they showed up on Friday. At first, and sometimes these runners just don't show up, and you're probably so wounded on Thursday from trading so many messed up, failed rejection that you're like, another loss, another stop out, another stop out. But that's the way it is when you have the SPY tanking. A lot of tickers don't break pre-market highs. So soon enough, we had IMMN here, and I actually, if you look at my data here, I'm going to show you where exactly I posted IMMN. I'm going to show you. IMMN doing a 180. Wait, where is it? Right, ticker is crazy. Hold on. So you can look at right here. Pushing, no, that's not IMN. No, that's not. Where is the ticker? IMNN. Hold on, I'm trying to, oh my God. Hold on, 7 a.m. Right here, yeah. IMNN. No, I was long at 70 cents. No, that's not it. Oh, that's not it. Hold on, I'm trying to find. Oh, this is the wrong date, Orlando. What was today's date? The 23rd. You can see that I have 23rd right here. 23rd. Okay, okay, well, right here, right here. Bought IMMN right here, right here. You see me buying it? You see me buying it? I bought it. You can see this is a chat alert. I bought IMMN right here at 813 at 61 with a stop of 57. You can see so here. You can see you timestamp May 23rd, 8:13 a.m. Right here. I bought it and then I got stopped out into the wash. This is the problem with trading. Sometimes you get stopped out on the best setup, and that was the biggest mover of the week right here. I should have went back in long, but I kind of chickened out. I was not fast enough on my small account trading challenge, my speed keys, my market, my broker, I had to. It takes a lot of adjustments because initially I lost. Usually I have my speed keys to buy like 2,000, 3,000 bucks of the small account, and then sometimes my account goes below that, and then when I click buy again, it's just insufficient funds, and I have to change the hotkeys. It's just a big mess. I need to have like 5 different hotkeys for like 3,000, 4,000, 2,000, and 1,000 bucks, so they all work out. Because I don't use hotkeys in my like big account. I use hotkeys on my small account. So here's the alert. The ticker is going crazy. So I was buying it as the stock breaks 60 cents. I was like, this is a good ticker. This is a day two. Actually, this is a day two continuation. This is a setup from my book, playbook. So I thought it's gonna do should hold 60 and go to 70. Soon enough, the stock holds 70. And I had no idea that IMMN is gonna go to $1 and 140. I mean, the stock had news. We had liquidity, and it was just crazy. And I actually, you can see on the top right that I was pretty much I actually made no money. You see, my first trade was 61 to 57. Terrible trade. Terrible trade. I actually bought it over here and I sold it into a dip. Soon enough, I should have chased it. My hotkeys wasn't working. I was pretty much just terrified from all the shitty ticker on Thursday, and I was like, "The hell is this market? Why the hell does this market turn sour?" So soon enough, I ended up just shorting at $1 and covering at 140. That was stupid. So I was shorting front side. This is a big deal. 50 cents to up 150. That's crazy. But I traded the stock poorly. I actually, on small size, you can see that I have just small size in there. I was buying it here. I was shorting it here, covering here. I traded this ticker 4 times, and even though it went up 300%, I made no money on the way up, no money on the way down, and no money while I was buying in the aftermarket because I bought it as well in the aftermarket. I'll show you exactly where I bought. I bought it over here. I bought it at 156 in the aftermarket. 152. It goes to 170. I have 10%. I think it's gonna go to $2, and wham! I make nothing. That's another freaking trade that I did because it broke the pre-market high here at 150. So I made no money on this ticker. That's just the way it is. Sometimes you just mess up. It's just the way it is. You can see that I traded this ticker 4 times and I made no money on it. So on Friday it was just flat trade. Hold on, let me see if I can get you guys to see better. There we go. Flat trade. I was buying it as it broke the pre-market highs, 150, hit 170. I should have taken 10%. I didn't. I mean, this consolidation scared it. I was trying to short around here. I traded just like I said. Like I have rules in my 6.5 hour course. Try not to trade a ticker more than 2 times because it's usually you're on the back side. You're usually on the wrong side of the trade. I traded this ticker 4 times and I messed up. Like one of these tickers is just going to take you out, and you need to protect yourself from this ticker taking you out. It's just the nature of doing business. And you can see that in this ticker, if you were short, you were dead. Like say you shorted 110 and you got up to 170, you are dead. So I didn't really want to hold it short, for 7 hours. I actually bought it as we broke here in IMN. So the momentum now continues. After the SPY plunged 800 freaking points, the momentum is now continuing. So we had IMN and the next ticker, and then we had another ticker, BLMZ. You can see so here, 22 to 30. 22 to 30, I missed this by going get my tea. So the reason you don't see big gains on this day is because I was one ticker, I got stopped out, and the second ticker, I went to get tea. My best home run trades for Friday, I missed them because A, I didn't have my tea, and B, I got stopped out. So that's the reason why I didn't make money on this freaking day. It's just the nature of doing business. I actually made some money in Works in the aftermarket by looking at my scanners, trying to buy it at 64, selling it at 68. I didn't really make that much money. The other ticker I made money was SBET, which was an uptrending wedge pattern. You can see the You can see that I made really nice money here. That was a green trade, made 40 cents a share, but there was just nothing else except those big two movers that happened between 7 a.m. and 11. There's nothing really happened after 11. Nothing really happened in the aftermarket on Friday besides IMMN that pretty much broke the pre-market highs, and we went up 10%, and I managed to buy it, and we didn't go that much higher, and I got stopped out on the way down. It's just, it's just you can see that on Friday I didn't really perform that well, and just that's just the nature of the game. You're just, you can see so that I try to trade LTRY over here. This is another ticker. Like you have to understand, is this a 52-week breakout or is this a 52 resistance? So once the stock travels a long way and it hits the 52-week high, you have to ask yourself, is this the resistance or is this the breakout point? So in this situation, I thought this is going to be a breakout point. I was like, it breaks 230. We might go to $3, 350. It's going to squeeze all these shorts out. But you can see the price action was different. You have to understand, like, once it breaks the 52-week high of 322, it needs to come back and test 322, what is it, 232, and then go up to $3. But in this situation, the stock went over 232 and we got slammed to 220. So we had a hard rejection. Even though we initially broke out from 232 to 265, this breakout did not hold. So we break 232, 265, we come back to 232, and we need to hold that level. If it doesn't hold that level, it's a short the daily resistance. Because all it did is just broke 52-week highs, squeezed some shorts, and then we tanked. So I thought about shorting it, but I was like, you know what? I'm not gonna sit here and be short. But what I did is I just got out, lost 10 cents, and called it a day. That's really all I did. And it was the right thing to do because the stock pretty much tanked afterwards. You can see that we tanked down to 190 here. So those are the tickers for today. I know it's a lot. I know it's an hour of talking, and it takes a lot of practice to trade these things. Make sure you get yourself a comfortable chair like I have over here, which is this one. You can see how comfortable my chair is, and I also have a nice footrest over here. You can see so over there. That's my footrest, and gonna have to, I know some of you do not like trade ideas and do not want to use them, and I keep asking you, like, how do you trade without trade ideas and scanners? How do you trade without seeing all these tickers all the time like I do? You do need to trade these tickers, and you do need to watch these tickers. My chair is around like $500. I do enjoy it. It's actually very comfortable. So make sure you get yourself a really good chair because you're gonna be sitting on it for a very long time. And I actually pretty much added this footrest over here so I can see as many tickers as you can see. So over here, you can see so that I do have a 42-inch screen, pretty much a 32-inch screen, a 27, and then I have another S&P 500 over there. So I do have, and these are all hooked up to my 4090, and I did just purchase this Razer speaker right now, and I'm actually enjoying it because I was listening to EDC Vegas. Like, I'm very excited to go to concerts from time to time, and EDC Vegas was they had some really cool songs going on there. Other than that, guys, it's been a fun time chatting. Make sure you get in the link below. You can pretty much just click the link for the monthly and pretty much get started with as low as $75 in the first month. And I'll see you all in the chat room. It was a crazy week, and I'm sure we're going to get a shitload of momentum going into next week. Peace out.